Going into 2020, it's actually pretty scary considering the stock market has produced some insane returns, but we're not expecting the stock market bull run to continue that well. It was only initiated by the initial crash and then the recovery. And in 2021, you can expect some stocks to really fall off the map. In today's video, we're going to be trying to look at the stocks that billionaires are buying. As we all know, billionaires are literally the richest people in the world. So when it does come to buying stocks, who better to look at than some of the world's richest and elite? So one of the first billionaires we're going to be looking at is Warren Buffett. A renowned investor known as the Oracle of Omaha, Warren Buffett is one of the richest people in the world, and he's been investing since he was a very young person. Currently, he continually invests in his company, which is Berkshire Hathaway. And recently, he's been purchasing some very interesting shares. Now, one of these stock picks that Warren Buffett has invested heavily in over the past couple of months and will possibly continue to invest in 2021 is Bank of America. Now, banks are actually considered riskier right now because of the current financial crisis that we're experiencing due to COVID-19. So for Warren Buffett to be buying and holding such huge stakes in the Bank of America, it's very interesting because it possibly means that he knows something that the rest of us possibly don't. So if we look at this article by The Motley Fool, we can see just exactly how much shares Warren Buffett has recently purchased. It states, in just 2 weeks, the Oracle of Omaha and Berkshire Hathaway collectively invested $1.7 billion, purchasing 71.6 million shares in America's second largest bank by assets. The company now owns more than 1 billion shares of Bank of America and 11.8% of total outstanding shares, making it the company's second largest holding behind Apple. So it says, needless to say, Buffett is bullish on the Bank of America, and it says that he may be bullish on the Bank of America because they actually have strong capital position and a safe dividend long term. So this article, which will be linked in the description, basically goes into exactly how safe the stock is and the reason Warren Buffett may have chosen this stock. Very interesting that he would pick this stock, and Warren Buffett's choices, I do want to state, are possibly some of the greatest ones. However, just because a billionaire does buy a stock, it doesn't mean that you're going to be guaranteed to get a return. Take a look at this, for example. So one thing that I noticed about Warren Buffett is that he doesn't always make the best investments. Although he makes a few good investments that outperform the rest, some of the investments aren't exactly great. For example, if we look at Kraft Heinz, which Warren Buffett has invested around $10 billion into, he's actually lost a lot of that money. And it's interesting because if you just literally put the same amount proportional to your income that he did, you would think that you're making a good decision. But we can see here that Kraft shares have plunged 62% since a merger. And it's been really interesting to see what's going on because usually, well, not always, but sometimes when a very rich person publicly announces a stake in a company, it can show public interest in that company because it's like if this rich person is somewhat saying that they believe in it, then maybe the rest of us should too. So we can see that Warren Buffett's initial $13.8 billion investment is now just valued at $10.5 billion. So if you're gonna buy Bank of America just based on the fact that Warren Buffett did, that wouldn't be a smart move. Look at Bank of America separate to Warren Buffett and just think why it's a good stock to own on its own. The next investment opportunity we're going to be looking at is going to be Pinterest. Pinterest is a social media company that is a bit of a weird one because it's not in the spotlight, at least not yet. So I would say if you're watching this video right now as it's just been published, I would actually recommend investing in Pinterest. You don't have to, but just consider it and do your own research and own due diligence before investing in Pinterest. Most people know about Instagram, YouTube, Facebook, and Twitter, but Pinterest is one of those slowly undervalued companies that's making its way into social media space. So according to Nasdaq.com, on this article, it's talking about what billionaires are buying. And one of the companies that many billionaires have been buying up is Pinterest. So article states that Pinterest has certainly caught the attention of many billionaire money managers. By the end of the third quarter, 13F filers had added almost 40 million shares from quarter 2 of 2020, with Melvin Capital tackling 7.62 million shares to an existing position and Dan Liob's Third Point initiating a $3.58 million stake. So we can see that this is very interesting. And if you're wondering what a 13F filer is, or a 13F file, it's basically a thing that people have to file if they have at least 100 million assets in under management. And it basically allows normal people like you and me to see exactly what the top hedge fund managers and the smartest and richest people are doing with their money. So it's interesting to see that these people are investing heavily in Pinterest. They added 40 million shares, which is valued at a lot more right now. So one key reason as to why Pinterest is something that's interesting and something that's growing is because it says that Pinterest could be emerging as a budding e-commerce play. Since pinners are always willing to share the products, places and services, things that they like, Pinterest can provide small businesses with precise audience targeting. So this is something that I know myself because previously I did use Pinterest and I did look at it, and it was something that people did use to run ads. Although it is quite in its infancy, we could see Pinterest growing continually over the next couple of years. And this is something that I would hope is possible, considering Pinterest actually has very, very good books behind it. So this article right here by the Fool.com Investing, where someone talks about how the single best investment idea for August 2020 was to invest in Pinterest. They just highlight a bunch of factors as to why Pinterest is actually a very good buy. Now we can see right here that Pinterest's market cap is around $43.91 billion, and it's currently been increasing and just simply going up in the past 6 months. You've seen it go from $30 all the way up to $72. That would be over a 210% return in less than 6 months. And this is probably going to continue going up, although the steam is going off right now, and with 2021's complete uncertainty regarding the stock market, stocks like this can most likely succeed with or without a vaccine because they're not really vaccine dependent. So I would say that Pinterest is possibly something that you should possibly be holding. The next one we're going to be looking at comes from the same article, and this is Snowflake. Now, if you know about Snowflake, you'll know that the IPO was absolutely insane. They made their debut only in September and have already amassed a market cap of $90 billion. Some would call this overvalued, some would say it's a lifetime opportunity. Either way, the rich and wealthy are investing in Snowflake Inc. So this article goes on to state that this is a very good opportunity. So Warren Buffett added over 6.1 million shares, and Philip Lafonte's Coat Management buying more than 4 million shares. So it isn't your traditional cloud services provider that leans on subscriptions to drive growth. It's based on usage. So we all know that the more data is stored, the more Snowflake cloud computing credits are used. And we all know that right now, basically, the world is in a very bad position. A bad position pretty much where everyone has to stay at home and use more cloud computing. And we all know that cloud computing is something that's becoming more and more popular. If you've seen recently in many different spaces, even as Google Stadia, we can see that cloud computing powering a gaming platform such as Google Stadia is something that's very interesting. Apple Cloud, all these kinds of companies coming together to use the cloud system is something that is going to be more and more prevalent in the future. So you could say that this is a very good opportunity to get a stock at a decent price, as the cloud computing industry in the future is most certainly going to be bigger than it is now, especially since this pandemic doesn't look like it's going away for at least another year. So we can expect cloud computing companies to continually grow and experience rapid growth due to the constant shifting work environment caused by the COVID-19 pandemic. If there's one thing that you could get out of this pandemic, it's possibly a discounted stock price that could triple in the near future. Now, as always, don't just take any information you see on the internet as gospel. Everything I've said in this video, you need to do your own research before placing funds into an account and purchasing shares of said company. Despite these being good stock picks backed by some of the world's leading investors, it doesn't mean that these stocks can't fail. You see, what you have to understand is that despite the billionaires pouring millions of their dollars into certain stocks, they actually own billions of different stocks too. You see, these guys manage hedge funds, and these hedge funds are actually extremely diversified, meaning that they own millions of shares in many different and hundreds of different companies, meaning if they are to buy 1 million shares in a said company, it doesn't mean that they're expecting an immediate return. Maybe they're expecting a 5-year return, and if you're someone who needs a 1-year return, maybe you should look at different shares and different stocks. You see, hedge funds don't make profit on every single stock that they own. Every single investment isn't going to go up. That's not how it works. Some of them go down, some of them go up. But the moral of the story is, when these rich guys own these hedge funds and when they invest with them, overall, all the investments combined, the final number is usually a 20 to 30% increase year over year. That doesn't mean that if you invest in one of the stocks that they picked, you're going to get the same return. It just means that that is the return generated by the overall decisions, including every single stock or investment opportunity that they have. So just bear that in mind before you blindly purchase shares of Snowflake, Pinterest, and Bank of America.